The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Thanks for joining us today. Live here on the TFNN network. Let's take a look immediately at the 10-year, the September contract. Haven't been talking about this lately because we've been a little biased towards the long side, seems like for a couple of years here, and got some technical damage on the September contract below 126.04. This is our daily, and that was after we had the technical damage on the weekly below that 127.11 and kind of going back and retesting. Now, the U.S. stock market doesn't like higher rates. That's pretty much a fact. And at the same time, repost the chart here. They're telling me no one can see my chart. At the same time, we back on track here? Good to go? Great. Charts are live here. Okay, so at the same time, we've had the U.S. dollar have a little bit of a technical situation on the downside, getting below 96.38, going back and retesting it, staying below profiles, if you will. And what does that all mean for the U.S. stock market? Combined with a couple of other fundamental factors, we've had a little bit of a pullback, and that pullback has coincided and actually reached some targets this morning around 2068.75, actually to the tick. I want to just that was a target-rich environment on the 2068.75 area, hit that to the tick actually. But what we're ultimately looking at here is, are the internals of the stock market kind of matching up with what the index is doing in general, and are there any disconnects going on? So as we look into the S&P 500, we look at our so-called speed dials here, and we've been noticing that this breadth situation continues to get more negative, and I'm going to reset that so you can see this a little bit better here. I'm going to blow up the last couple of, I'm going to take out the middle ground, and as you can see, right on or around May 25th, we started having a new leg down on the breadth situation, showing that the internals of the stock market don't really want to cooperate with some of the things going on with the index itself, and those present trading opportunities in this case on the downside. So on or about the May 25th, we started taking a pretty serious, more than serious slant on the short side, and that was after we'd kind of just been mixed up all over the place for the past month or two on the internals versus being above profiles on our weekly or daily. So all that being said, we've been looking for shorting opportunities, and yesterday, in fact, we had a confirmation on our weekly, first time since October 24th of 2014. We'll take out the middle ground there, that we had been positive breadth on our long-term weekly and shifted over this past week, Friday, on the close into negative territory on our weekly breadth. And that's a pretty serious event when that happens. Now, it doesn't have to stay negative, but what that tells us, going back into our S&P charts, that we're not looking at this stage to buy dips on the S&Ps. Even though we've come down and hit this inflection point to the tick, 2063.5, that weekly unfair low, we had our targets set a little bit lower on our automated systems, to be honest with you, a little bit lower than 2068.75, kind of in that DMZ, if you will, down below. But the fact of the matter is, with the breadth negative on our weekly, daily, I'll pull up our S&P here. Have I lost it? Where the heck did it go? Here we go. We're pretty much negative across the board, and stocks this morning, as you can see, stocks, equities, down 3.5 on the S&Ps pre-market. We've come up into these 240s, bottom of the box, kind of retested and kind of backed off. We actually reached a high a while ago around 2078. So again, all good news for shorts. Anything can happen. Make sure you put your stops in. Short-term stops need to be above 2078. But again, we're looking to pass on buying the dips based on those breadth situations, not looking very rosy. And you might say, well, good Lord, we come down from 2120 pretty quickly. 1, 2, 3, 4. 5 days ago, we were at a high of 2120 approximately. And do we deserve a bounce? I think we've had some decent little bounces along the way. But the fact of the matter is you want to try to put probabilities on your side of the fence and try to have the stars line up a little bit better than this to start stepping in, backing up the truck, and start going long again in a large way. Now, we may get a bounce here. We may get a significant bounce. But in my opinion, the odds are, and the internals are telling me, that you may want to pass on these inflection points on the buy side, because we kind of got Big Mama over here, the weekly breadth, if you will, that has shifted gears, and that's a pretty serious event when that happens. All right. So again, that's kind of the way we're looking at this. Therefore, as we drill down into the scanner in general, we're going to just kind of hit the grid on the S&P. We're going to pop up the internals in the S&P. We're going to see a pretty lengthy list of stocks that are trading below profiles. In fact, this is pretty far-reaching actually. But if we go into our metrics here within clicking on our speed dials, we're going to see that 271 stocks now are trading below the box. 55% rounded off, approximately 55% of the stocks in the S&P are trading below profiles. Does that have to stay that way? No. In fact, we've got some new boxes attempting to appear below. That's new demand areas happening below. That's, a little supportive. We may get a little bit of a bounce here, but I don't think the odds are on your favor again of trying to buy stocks in this particular environment. So what we're looking to do is still trying to find weak stocks, even after we've come off 50 points here in the last 5 days. Got to take that for what it's worth. So as we look at the scanner, and we're looking at the Alcoas of the world, looking at our paragraphs here, long-term view, intermediate-term, and short-term view. You can read that if you got the scanner. We should have this up for you this week, as soon as some of our technical cohorts on our side and TFNN side get this finally finished, which is going to be a great day. We're going to take a look at Alcoa here. This is one that's relatively bearish across the grid here. And what it's done lately, as you can see, we've crossed the borders again below 13. Alcoa crossing some intermediate borders again. 1237 is now where you can place your stops. You might say, well, how do you know how to trade this thing in general? I mean, when we start seeing these indications of scale out opportunities when we were short before, then we're looking for shorting opportunities, 1295 in this case, or breakdowns below 1237. Now that's happened, in the stock market breadth situation looking like it's looking. Again, we're still looking for weak stocks to sell resistance or sell breakouts. That's my opinion on this. So that's the way we're looking at the stocks right now. That was just a relatively prime example. We've got ACE Limited, ACE across the board here, just looking ugly as I don't know what. Let's just pull up our weekly view, daily view. Let's just kind of drill down into the instruments that are going to cause the least pain if the market rallies and you're short. Cerner Corp, CERN. It's quite a few things on the screen here. My goodness. Let's look at Cisco, CSCO. That's one that has really been coming unglued lately as far as profiles go. And here's the weekly situation. So again, starting to cross some borders. Now you can orient stops 28.37 above there based on your appetite for risk. When I say coming unglued, it's just kind of sympathize with the market pullback, but on a relative scale, on a percentage basis, it's been coming off a little bit harder than the market. So again, now you've got that weekly unfair to leverage against, place stops oriented above, and a Friday's close on Cisco below 28.37 is going to be pretty telling for this instrument. Let's jump around a little bit, get away from the relative strength trading game for a little bit, and let's take a look at the euro. A lot of guys following this, and we were hoping, in fact, yesterday to get a short off around 122.25. That's what stops are for. Now we've closed above yesterday and gone back and retested it. You really can't look at this from the short side until we get back down again below 112.25. And again, the theme always is lose a little, lose a little, lose a little, make a lot. You're going to have to take the medicine every once in a while and wait for some of those borders to be crossed again. The Japanese yen, again, haven't, I wouldn't call this technical damage, but again, getting back into the balanced areas. We talked about picking a battle around 124.61. Again, that's what stops are for. Can't seem to hold that next stop down on the support side. It's 123.29 on the yen. Pay attention to that number. I'm a big fan of not shorting the yen. If you've been watching this show, you should believe that by now. Canadian dollar, a little bit telling situation here. I'm in the technical damage for the first time. Talked about 123.68. In fact, yesterday trying to catch a bid there. A little bit farther down than I'd like to see it. Going to be looking at daily closes here. If we close back in the balanced area, I still think we might have something in play on the long side on the Canadian dollar. We're going to drill down into the U.S. dollar. Getting a little bit of a bump this morning, not much. Got to get back above 96.38 on this thing, get a close above, and start looking at that from the long side. Short-term traders, again, not a lot of direction on this, kind of bouncing around. Not a big fan of going short it, but just looking for some confirmations on the upside. Let's take a look. A couple of the usual suspects we tend to look at. Gold, August gold. Again, nothing to really write home about here. Just some general action on the downside. New daily orange bar attempting to appear. We may have a new profile, new leverage points on the daily to look at pretty soon. Got to take a look at silver in the same paragraph. Nothing cooking on silver. Not a big fan of going short it. Would just like to get some new daily profiles, just like we're looking at with gold, hopefully. Soybeans, talked about having to get back down below 913.5. That hasn't happened. We've kind of tested a couple of times and just elevated off of it. Again, nothing to do here on soybeans. I'm not a big fan of going long this instrument and just looking for some reasons to short it. We have caught some really good waves down on this particular grain. This is November beans, new crop. Here's the 240s. Can orient some short-term trade stops above 924.5. Again, not a big fan of going long soybeans right now. I think I hear the music in the background. Guys, we're going to be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're taking a look at the DAX right now. Just wanted to pull this up. This thing's been going to hell in a handbasket lately. Excuse me. Wanted to point out on our grid here, we haven't had any good news whatsoever. And by the way, it's the ugliest situation on our heat grid when we look at our dailies, probably our 240s too. I mean, there's just no end in sight when it comes to, I mean, normally we would like to take a look, and the middle ground is just non-existent here. We've got no new profiles attempting to peer below. Again, I know that's only 30 stocks in this particular index, but as we look at this, it's ranked just evilly low. I mean, this thing is just, ooh, my goodness, the internals are all pointing south here. Euro's been bouncing a little bit. Obviously, that's not what folks, want to go along the DAX are looking for, but excuse me, guys. This is the daily situation. We've got no new information down here. I would just kind of stay away. And by the way, no new demand areas or profiles even attempting to appear even recently on the 240s. I'd let this thing try to find its own bottom by at least outputting automatically a new profile down here. And what does that mean? That means that when we go into our futures grid here, we're going to click on this. We're going to just kind of search for our DAX futures. We don't see any yellow peel back cells coming on board, and that means that we don't have any new profiles attempting to appear. So again, until we even start seeing hints of something like that, buyer beware. I mean, these are clear-cut signals when it comes to using our derivative of market profile, our kind of methodology on this. So that's the way you got to look at that, in my opinion. The Shanghai, on the other hand, I'm over here in Asia, and I mean, I know some people trying to short this thing right now. It's more than like, I mean, you hear the news stories, you excuse me, you read some of the things on Bloomberg, excuse me, and it's the 6.5 trillion in valuation has been created in the last 12 months in the Shanghai stock market. Well, this particular market was suppressed, depressed, whatever, for a very long time. And, does the rubber band want to snap back pretty hard sometimes? Obviously. But, we talked about the breadth situation when we pulled back into 44.15. It was still very, very positive. Therefore, we're looking to buy that dip on that particular battle point. Right now, again, we're just going to that's the daily situation on the Shanghai. We're going to pull up our index heat map. Folks, it is completely still daily, weekly ranked the highest, daily ranked the highest, 4 hour, ranked the highest. I mean, you see where this is headed? 60 minute, still ranked the highest. You want to see some indications at the very least that it's okay to get in the water on the short side, and you don't have those. Now, the one thing I will say, drilling down to our 240 breadth charts, we're starting to see some supply come on board on the very short-term 240, which means that almost 12% of the stocks in the Shanghai 180 may have a new profile appearing. That in itself, and just that, I mean, and that's on an extremely short-term basis. You want to start seeing some different numbers on the intermediate, the daily, and the weekly, and you want to start seeing some hints on the breadth and on the index itself that there's some form of slowdown starting to happen. I don't care what the fundamentals say, overvaluation. The Chinese economy is slowing down. Inflation is lower than expected. Blah, 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 blah. It's not showing up in the technicals or the numbers or any of the fear factors that you would normally see in some type of market turn yet. And can the Shanghai pull back 5% in a blink? Without question. Do you need to put stops in? Do you need to find somewhere to put stops in if you're going long this thing? Yeah. But, this thing was, in a lot of people's minds, overvalued at 4,000. Now it's at 5,000. That's 20% ago. And guess what? It could go up to 6,000. You got to have that attitude when you're trading these type of situations, and you can't let something get away from you if you're trying to, short a animal like this. Guys, we're going to go to another break. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Showing you the scan right now, just kind of focus on the ETFs for a little bit. This is our daily ranking heat map situation on the major ETFs that we look at, and as you can see, they're all red. That's not good. Looking at our 4-hour, that's not good. Weekly, XLV. You know, this is one. And again, I'm going to pull up the XLV really quick. This is one we hadn't been completely shy about talking about from the long side. I haven't been talking about a lot of long opportunities, but weekly still above profiles here. Starting to show some cracks finally on the daily. That's why I'm bringing this up. I mean, we still have our breadth situation on the weekly still very, very strong, and it's the same principle as the S&Ps. I'm going to pull up the XLV on the weekly really quick. If we get back down into 72.70, and that weekly breadth is still positive on the XLV, and we have any kind of cooperation starting to happen on the S&Ps in general in this breadth situation and finding any inflection points to hang on to, and that may be on a relative scale. That may be when the S&Ps actually possibly might take a run back down into, I'm going to pull this up here, the 2038 area. That might coincide with that. Come on, charts. Okay, so again, on a relative scale, dang it. I'm sorry, guys. I'm trying to get the, okay, here we go. All right, so as we look at this, 2068.75 might do a little bit of a sympathy bounce here, but as we're looking at our breadths, I'm fully expecting this to continue to head south. Now, is this a first target on the short side on the S&Ps? Yes. So what does this mean for the XLV? So again, in my mind, we haven't got, you know, spotlights on going long right now on the index itself. So therefore, you know, the XLV might not be, you know, the greatest long in the world, and we may have maximum leverage happening on the XLV around that 72 area if we can get the S&Ps down into this 2038 area. So looking at a relative scale trade, that's the one we're going to kind of keep our eyes on. I'm still a big fan of healthcare in general. If you've been watching this show, that's what we haven't stopped preaching about. If you put a gun to my head and tell me to go long something. So we're going to jump over to December corn really quick just to change it up a little bit. And as this populates, getting a little slow here. Not a big fan of going long new crop corn. That's what this is. Hope we can get there. How are we doing on our connection there? We looking good, Al? Starting to feel like we're losing it here. Okay, cool. Maybe it's future hosting. Let me just check something here really quick. How are we doing? All right. So as we look at December corn, we talked about trying to leverage off of this short area, 380.5. Again, hasn't worked out. We've kind of rattled around up here, but that's where we're going to be looking at the shorting opportunities on December corn, new crop corn. All right. We're going to look at July wheat. Hadn't looked at this one too often. Here's the daily situation on July. We got a big barrier on our weekly to get through. I'm looking at this as a decent short opportunity. Need to see a daily close again. I know we got rattled around there. Need to get back down below 524.5 or a quarter on July wheat. We're going to take a look at the XLE. Now, using our profiles, we always want to, you know, try to get back and get across barriers again. And what we talked about recently, a couple of weeks or 2 weeks ago, we wanted to get back above our 78.97, or at least just call it 79. That didn't happen. We never had a close correct on that. We had an orange bar, but you know, we never really had a lot of strong reasons to go long the XLE again. I mean, this was the relative strength trade from hell, in my opinion, before, when crude oil was bottoming out around 44, 45, 46. We caught some good bids on this, but this has been kind of the opposite of that relative strength game lately. And with crude oil starting to rattle around 58, 59 again, we're just not seeing it here. So again, I think this has kept you out of trouble trying to nibble on the long side. I'm not a big fan of going short the XLE stocks, but again, at least keeping out of trouble here. The next time we could start thinking about going long is obviously looking at crude oil crossing some barriers on the north side, but getting back above 78.24, 79.11, getting through that DMZ on the weekly. Let's just take a look at that. Getting back above the long-term inflection point that we have been above 2 or 3 weeks ago. But again, we just need to see this thing at least getting into the balanced area on the long term. Let's go back into the scanner. Let's go into our index section. Let's look at our daily. Hold on, guys. I need to take a small break here. 30 seconds. To adjust something here in the office. All right, here we go. As we look across this, we're going to just, take a look at the S&Ps again. We're going to drill down into it. And what it does is it puts the 500 S&P stocks right in our face, and we can actually do some sorts. So what we're going to do again is we're going to look at, again, because I'm not a big fan of going long the index right now, even on the 2068.5, 2068.75 down into 2063.50. Let me state why we're talking about those numbers. All right, let me get our S&P's back up. Here we go. So this is the weekly. So we always talk about DMZs, and these 2063.50, this has been the top of the box on the weekly. We are breadth negative on the long-term weekly, first time since October 24th. And that's an interesting situation because normally in normal situations, the likelihood of it turning negative above profiles is very rare. That being the case, when that happens, we more than likely want to pass on buying opportunities. And that DMZ, we like to call it, is unfair highs 2063.50 into those 2068.75s. All right, we have caught a little bit of a bid this morning trying to bounce off those. The DMZ, remember, 2063.5 into 2068.75. I'm not a big fan of buying those particular dips on the index. So therefore, in a relative strength trading game, we're going to be looking at strong stocks to buy if we were considering the market being able to bounce and drag up some instruments if you're looking at the long side. But right now, all things considered that we've just said, we're really not interested in buying stocks. So we're looking for shorting opportunities. And what we're doing here is we're looking at, if you didn't catch the first part of the show, I'm just going to look at stocks that have just not been cooperating. I want to show only matching results. And we want to find stocks that are going to cause the least pain if the market rallies, which, anything can happen. If the broad market rallies, we want to find stocks that just, for the most part, have not been able to get out of their own way. Archer Daniels Midland, ADM. We're just going to go down some household names here that are showing their hand as massively weak or technically damaged, if you will. Here's the situation on ADM. New profile appear above price action on the weekly. Very bearish signal. Stops oriented above 5160. We think the market's going to head lower. We want to find stocks that are trading and breaking down technically, and this is starting to happen on ADM. And that's the way we're looking at ADM, and that's why we're trying to put probabilities in our favor, hopefully. AFLAC, AFL. Taz says, trend is favorable to shorts, has been enforced for 2 weeks, blah, 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 blah. So let's look at, did I say that quick enough? AFL, here we go. All right, so again, getting below profiles here. Stops oriented above 6186. I think we got some more downside on the S&Ps. We may have a couple little bouncy rallies here, but the internals are saying, and here we go, 6197 unfair lows on the daily, 6186 unfair lows on the weekly. You can orient stops above that DMZ, and we're looking for stocks that are starting to crack. Now there's probably some better shorts out there than those. Those aren't the ones that have just been in defined downtrends. Chipotle Mexican Grill, CMG. This is one that's been on my radar screen. We've talked about this a couple of times. CMG, boom, here we go. And again, guys, these are shorting opportunities because we feel like the market may crack even farther. Here's the weekly. We retested that 689.75 area a couple of times past couple of months. Can't get through it. That was a great barrier. Put stops above. Here's the situation on the daily. Again, stops can be oriented above 622 based on your appetite for risk on CMG. Let's get back into the scanner. Let's keep going down the list here. We looked at Costco a while back, COST. These are stocks showing profile weakness. Here we go, COST. Weekly. Got some great shorts off with this a lot earlier when the market was continuing to hang in there. Now when the market pulls back, you see what happens. Weak stocks just sometimes come apart at the seams, and that's what's going on here with Costco. Let's go back to our scanner. Coca-Cola, this has been on the list a lot. CCE, I'm just going to, Dominion Resources has been on here for a while. Edison International, Ford Motor Company. Let's take a look at Ford. So as we look at Ford, waiting for this to populate here, these are stocks, if you're looking to buy stocks, these are definitely not on the radar screen right now. Why? Because they're not showing any form of strength and are showing early weakness, showing their hands early. And you've got better long opportunities. But on the short side, you can orient stops above 615.28 on Ford Motor Company right now. I'm still a big fan of staying short that stock. Fluor, FLR, that one's been on the list. Let's just keep going down the list here. Hershey Foods. Now, let me pull this one up because we've got a little bit of a mixed bag here. HSY. Let's just kind of do some instant analysis on this one. Okay, so going back and retesting them for lows 92.32. And 91.87. So you got like a 50-cent DMZ there. And what do you do with this now? I'm still a big fan of looking at Hershey from the short side with stops above 92.5. And again, I understand we've come off of this thing pretty well here. We've come off from the 103 area. Things on our lows go lower, things on our highs go higher. That's the way you got to look at this, especially if you're considering a market sell-off that might happen again. So going down the list, Intel, ooh, ouch. INTC. Stops above 32.03. I think this thing could head considerably lower. Let's go back to the scanner. Let's keep looking. IBM. Finally, here we go. Been talking about this one and trying to find reasons to short it. Finally, it's started breaking below that 169.42 area. This was kind of coupled with former unfurloughs 169.01. So now, as we had been talking about this, as the I didn't have a personal grudge against it, but it was close to it. So below 169.01, we finally broke that and broke those previous profiles. This is why you look for these kind of below the box situations in stocks that are showing their hand early. Now, here we go. Here's the weekly. Now you can orient stops about 167.35. I think it just kind of like, tell your broker that's where your stops are and don't worry about this thing for a little while. Again, that's with some market help. International Papers on here now. Iron Mountain. Johnson & Johnson. What do you know? Still here. Let's take a look at that one. Kohl's is on here. J&J. Guys, we're going to go to break. We're going to come back and talk about the gift that keeps on giving, Johnson & Johnson, when we come back from break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartlys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Johnson & Johnson, here's the weekly view. Trying to get into this before we took a break. 98.58 stops above. We're going to kind of stay with that. This is looking extremely heavy again. May have a little bit of a whoosh sound on this one too, guys. Put stops in above there. Had the initial technical breakdown starting on the dailies a little bit higher. Again, that was kind of easy pickings there. And now we've got below the weeklies. And this is kind of the theme of the S&Ps, if you will. I mean, we go into these rest situations. I mean, this is, not bounce ripe opportunities, in my opinion. You got to keep looking for short opportunities in this type of environment. Let's take a look at Kohl's, Kimco Realty, Lowe's Corp, L Brands. I mean, these are all stocks that are, again, on the radar screen for not the longs that we want to be looking at in a environment like this to try to buy some bounces. KSS, let's take a look at Kohl's. We looked at this the other day, and it's a very similar situation to selling weak pieces of crap in a market that you think is going to turn south. And this has just been something that, again, market rallies, gyrates around, this thing continues to stay on the lows, the scanner picks it out for you, and boom, you hear the whoosh sound when the market finally starts pulling off. And what do you do with this now? You don't buy it. That's the first thing. It's not on sale. The market may head farther south, and this one's technically challenged. Did I say that? Mentally? Okay, L3 Communications. This is, again, we talked about this one yesterday, the day before, LLL. Just looking very heavy, still no reversals and profiles. You'll be alerted to those when they happen if you have this scanner. 3M, These are huge names, guys. 3M. Let me put this one up on the screen. This is right out of the scanner. Negative across all time frames now, and voila, get below weeklies. Stops oriented above 157.18 now, and this could come apart at the seams, just like some of its cohorts, like the Johnson & Johnsons of the world now. Here's 3M on the daily. I'm trying to pull this up. And let's go back to the scanner. LLL, we're going to pass on that one. We've been talking about it like there's no tomorrow. MO, Altria. Let's take a look at this one. MO, boom. Again, trying to find stocks that may give you zero pain if the market rallies. Guys, you couldn't ask for better picks. This has been on the radar screen for a couple of days here off the scanner. 5107, but what do you do with it now? Here's the weekly situation. You got a DMZ up there. I mean, this one you hope rallies back and kind of gets into that resistance, DMZ, if you will. But right now, it's kind of a wait and see to see if that happens. Let me get somebody else's screen off of here. Here we go. We're going to go back to the scanner. We're going to keep looking at Procter & Gamble. This is one just boring. What am I trying to say here? Hold on. I'm typing in the wrong symbol at the same time. Let me see if I can get PG up here. The gift that keeps on giving. Here we go. Stops can be oriented above 78.39 or a little bit more daring folks above 79.51. Guys, you've been great. Stay tuned. TFNN Network hosts all day long. We'll pick it back up again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.